Guys, welcome back to We Talk Money, episode 130. I'm your host, Chris Dunn, aka Moon Boy, Bitcoin. Let's go. We got Travis, Stock Geek, aka NASDAQ, coming to all-time highs. Crazy past week in the markets. Nikki's out today, by the way, so you're stuck with just the two of us boys. But man, what a crazy week this past few trading days.
Yeah, it's like we're back in the bull market and everything again. Feels a little bit like shades of 2021. Pretty wild stuff.
Wild. Yeah, I've been perusing the Reddit threads, just trying to get a read on market sentiment. And yeah, it's almost back to like the pandemic, like GME, shitcoin, NFT days. Like it's crazy how fast market sentiment can shift. I know, it's been, 2 years or over 2 years since the high, but it feels like this week is finally where CNBC flipped bullish. I'm getting all the calls and the DMs and Chris, should I buy Bitcoin? I'm like, you guys realize we've been in a bull market since mid-January, right? Like, so it's just wild. And actually, I think kind of the theme for this show can be, are we going into a full-on altcoin season? Because a few months ago, I did a YouTube video on my channel where I said, this is exactly when altcoin season starts. And the TLDR on that is basically when the total 3 chart, which is the non-Bitcoin and Ethereum market cap, gets above 450 billion. That's where I was saying, like, I think that's when we would see a full-on, like, real altcoin season. Right now, we've had popcorn season where, we've had random alts popping off. But right now, there's so many charts that are just like really close to having key breakouts. And so I want to dive into that. I know we've had some stocks in the community that have been popping off. I guess this week is like a little bit lighter on the macro data, but a lot of people have been, thinking about mortgage rates, which have continued to come down. They're down in the low 7s again. And it looks like bond rates have been falling for, maybe 6 weeks or so in a row. And this week specifically, they've been dropping. So is this in line with what you've been expecting and predicting? Is there any kind of surprises here on the macro side or the stock side, or what's kind of your vibe for this week?
Yeah, this is definitely in line with what we've been talking about here on We Talk Money and elsewhere over the past few months, really for a big portion of the year. And I said, watch out for these CPI head fakes where people are going to be freaking out about inflation and about higher for longer and rates needing to go higher, when in reality, what I think will actually happen by the end of the year is we'll be in a lower rate environment because inflation will be cooling pretty fast. And here we are, and it's happened. And so I am a little bit surprised at just how quickly it happens. Just in the last, I think, 2 weeks, you saw the front end of the curve basically collapse. I think last week alone, it was down 40 basis points on the 2-year. And then this week, the long end of the curve, the 10-year and the 30-year yields are also coming down pretty rapidly. So, it's funny because just a month and a half or 2 months ago, you had Rick Santelli on CNBC screaming that he thought the 10-year yield could go to 12 or 13%. And I literally tweeted on that day, I'm like, okay, I think this is the top. Like, I think we're at peak hysteria over rates. And nice. It was pretty close to the top. We had the 10-year and the 30-year that had peaked just above 5%. And of course, we have the short end rates that are even higher than that. But yeah, I think this is really what has created this great trade environment for us over the past few weeks, is that, finally the market has this big shift. We called the shift to the inflationary environment a couple of years ago. We did several We Talk Money episodes. I think there was one in particular where we said, the trade of the decade. Or the most important trade of the decade, something like that was our title. And we talked about how we were seeing all these early signs of inflation and that we needed to reposition portfolios for that. Turned out to be almost right exactly on that turning point. And then we've also called this other turning point. So, I think I don't know if it's just another pat on the back situation, but really it's great to see that we're on top of it, that we're seeing what we're seeing is actually playing out. And we've had a lot of trade opportunities come because of that. So what happens next? I do think 2024, the playbook shifts. We're starting to think about, okay, how weak could the economy get? Can the Fed actually thread the needle? Things like oil prices right now. Oil prices are showing pretty significant weakness, and that's not really in line with the everything up bubble that we're seeing everywhere else in crypto and stocks and bonds. And so that's an interesting sign we got to keep an eye on. We're keeping an eye on things like unemployment. We've got a big jobs report coming out on Friday. We're going to keep watching things like credit card delinquencies and the state of the consumer. But, I'm still relatively optimistic for 2024. I think it's too early to call the full year as a whole, but I do think the signs that we're seeing are very, very encouraging that, maybe we can escape a deeper collapse in the economy and that, maybe things are going to be okay.
Yeah. I know that historically, rate cuts seem to precede a recession. So right now, it looks like the market is kind of pricing in. It's actually moved up. It was the summer of next year. Now it looks like they're pricing in early as March for rates to start to come down. So do you think this is going to be followed by a recession, not just in the economy, but in actual like stock prices as well?
It's interesting. I do think the market may have gotten ahead of itself here in terms of pricing in cuts. I've been consistently worried that the Fed is going to be behind the curve again, and I'm actually not convinced that they're going to be cutting as soon as March. I do think there will come a point, when we have more downward pressure on the CPI in the spring, there will be increased calls for the Fed to cut, but they don't want to cut too early. They don't want this to be a 1970s situation. They're most afraid of a scenario where they get loose again and then you have inflation reaccelerate. So they're going to fight against this. And they're even Fed Chairman Powell was out, earlier in the week trying to say that. And the market also heard some, less cautious statements of his and kind of ran with those. But, if we're listening to the full statement that he's making, he's saying, he still thinks there's still upside risk to inflation. So I think they're going to be slow. I think the market might be getting a little ahead of itself on rate cuts here. I personally think they should be cutting, and I think they should be cutting by March. But, what I believe and what will actually happen are two different things. So I think the market may be getting ahead of itself, which again, that could create a buyable dip opportunity. We could have these markets ripping through end of year. Santa Claus rally continues, maybe even early into January. People start to get ahead of themselves even more and pile back in. You get Main Street piling back in. And then you have this kind of rug pull potentially from the Fed, not giving the market what it wants in terms of rate cuts. That could create that correction situation that we might be looking for in maybe early to spring timeframe in 2024. That'd actually be great. I would love another big pullback where we can get some more bargains, and we'll see if it actually happens. But I am seeing that for a potential mismatch between what the market's pricing and what the Fed's saying.
Yeah, I think a lot of people would agree with that. This is kind of, I found this on Reddit. This question says, where to put your money now? And this guy goes on to say, I'm at a complete loss when it comes to where to invest next. Are there any good articles or strategies that people are pursuing? Because I get kind of overwhelmed with all the negative news, right? So I think a lot of people are maybe in this mindset of like, hey, there is a lot of fear-based crap out there, right? People have been beating the depression, recession drum really since the market bottom, and that's why it's been squeezing short so hard. But are there any areas of the market that you think are at a value right now? Or, I know, the NASDAQ and the top tech firms are all at or close to all-time highs. I know Bitcoin's been ripping. It's up over 150%. We've got alts that are moving. Are there any sectors that you see that could be good values right now or still beat up?
It's a great question. Yeah, I think we have definitely gotten into a market environment where there are far fewer bargains, but there still are, especially if you go and look at, things that are more overlooked in small cap land. There's definitely more, especially one-off bargains. There are sectors that are very beaten up still, like solar and alternative energy that I think, could still have some good runway longer term. And so those are definitely areas that I'm poking around in. But yeah, a lot of one-off situations for me, certainly looking at individual stocks, there's still a lot of situations where there are stocks that are, I think, mispriced or underpriced. But certainly I wouldn't say that big tech, NASDAQ look underpriced. NASDAQ's up still 45, 46% year to date. Valuations aren't really super cheap on those at the moment. You have a handful of tech stocks that I think still could be, underpriced, that are well below market multiples, things like, PayPal or Etsy, stuff like that. But those are, again, one-offs. It's hard to say that there's large swaths of the market that are super, super underpriced at the moment that I can see. But again, I think that's why you kind of wait for those correction timeframes to be able to maybe allocate. If you're being a little bit more active with allocations, that might be time to deploy more capital when we do get pullbacks. We get 10 to 20% pullbacks in the market almost every year, and so when we get those pullbacks in the broad market, some individual stocks will be down 20, 30% on no news, and those are great times, I think, to allocate more capital. So. Patience.
and
Patience is
even
the name of the game.
Russell small cap is still well over 20% off of all-time highs. So there's still a lot of stuff that's beat. It's just like, the NASDAQ and large cap has kind of taken the cake over the last couple of years.
Yep, absolutely. Yeah. So it will be very interesting, but I think always important to reiterate, the fear sells. We know that we see that all day long in our world, or on Twitter. You can see that what sells and what gets clicks and views. But it's important to remember that base rate statistic, that we only get a market crash like once every 5+ years, and financial crisis even more seldom than that. And we do get a lot of corrections, so it's important not to overreact to the corrections, but utilize them to your advantage and not get too worried about the doomer stuff. I mean, it's funny, like this week alone, one of the big narratives is the decline in the reverse repo facility that the Fed has, and money market funds use this reverse repo facility. But 3 years ago, people were freaking out about the reverse repo balance at the Fed increasing so much. It went from, I don't know, 50 billion to like 2 trillion plus. And people thought it was going to be the end of the world because money market funds were utilizing this facility. They didn't really understand what it was for. And then now they're giving, fear-based, market crash scenarios because the reverse repo facility is declining once again, because money market funds actually have other places to go park their capital to earn interest now. So it's just funny to see it. I mean, there was doomer accounts talking about reverse repo on the way up. Now they're talking about it's the end of the world on the way down. And obviously we don't think that's true.
Did you see this tweet? There was a guy that said, there are Debbie Downers, and then there's doom and gloom, and then there's like this perma bear. And I don't know who this YouTuber is, but basically every cover image is something on fire and warning, and like just complete fear-based, like panic words. And we'd actually probably get a lot more views if we did some of this shit. But I said, fear sells, but in the end, it doesn't pay. Right. Yes, you can make money shorting, and you want to be objective and obviously not get euphoric and overextended. But at the end of the day, markets go up over time. And if you invest wisely, and yes, you pay attention to the risks, you're going to build wealth. But I think this is like almost makes people feel better by just focusing on the negative and the downside shit. It gets way more clicks.
Yeah. It's important to think about risk management and, look out for downside and look out for blind spots, or maybe being too overexposed in one area of the portfolio. But yeah, I think most people probably don't benefit from being too hyper focused on financial news.
Yeah. Let's jump into Bitcoin. I know a lot of people right now are back on the Bitcoin bandwagon and the big train. And we've certainly had a ton of movement this week. One thing that I wrote about in the Daily Doe today is it's kind of rumor driven. So there was this rumor going around saying that Qatar's sovereign wealth fund was looking for like some ridiculous, like 500 billion allocation. I don't know how legit that is, but one thing that I do think is interesting is how one of two of the big news events this week were the fact that El Salvador's Bitcoin position is back in the black, meaning they are now profitable, as they were accumulating. And the new president was accumulating Bitcoin on the way down through the 2022 bear market. And, he held to his convictions. And I even said, hey, it's great to see that you stuck to your convictions. And now they are, at least today, in the black. And then also MicroStrategy and Michael Saylor is up, over $2 billion in profit on their Bitcoin position. So, this is where, as Bitcoin climbs higher, this is kind of what feeds the bull markets, is buying begets more buying. When you see oh, these big funds or these big position holders are profitable, it's kind of like that drives the desire and that FOMO for people to want to be long. And right now, the narrative, and it's both a market sentiment narrative and like a fundamental reality, is the fact that the Bitcoin available on exchanges has been falling for the last 3 years in a row. And there's currently well below 100 billion worth of Bitcoins currently available. I've heard numbers as low as like 50 or 60 billion, all the way up to 100, but somewhere in that range. And so whenever I start to think about like, what does the extreme bull case potential look like? And what would Bitcoin's price be if we had, just one or two of these large, either sovereign wealth funds or institutional buyers that made a very public statement that, hey, we're buying tens or hundreds of billions of dollars worth of Bitcoin? It really only takes a couple of those for things to get really weird really quick. And I don't want this to be like, me being some moon boy saying Bitcoin's going to 1 million within the next year. There is a long tail, situation where something like that does happen. And I've just been thinking about like, what are the implications of that? What could that mean? And how could that develop? And so in the brief that I wrote, I was talking about FOMO with asset managers. And, the other big thing that was going around social media this week was the fact that Bitcoin is now back in the top 10 by market cap value, gold being number one at 13.6 trillion. Then you got Apple, Microsoft, silver, Nvidia, excuse me, Nvidia. And then Bitcoin, which is around, 850 billion. And so people are seeing that, right? And it's cool again. It's back on CNBC. It's back in the news. We're getting, my aunts, uncles, and, extended family that's like, Chris, hey, I checked my Bitcoin balance, and hey, I'm back at ridiculous numbers, right? So I don't know. I've just been thinking about this, and I'm trying obviously to stay objective and to stay balanced, and look at the potential black swan risks that we have right now as well. But I don't know. Price is just doing what it's done in prior market cycles, and I think again, a black swan on the bull case could be like one of these big sovereign wealth funds that's like, hey, yeah, we're going to buy 100 billion, and then there's like this rush where if you get hedge funds and institutions that's like, well, we don't want to be left behind. A FOMO level on like an institutional or a sovereign wealth level is much different than, I think, like a little retail bubble driven by primarily retail, crypto degenerate traders, right? Have you put much thought into this, or do you have an opinion on kind of the possibilities and probabilities here?
Yeah, absolutely. I mean, I think, we've been talking about this for more than 6 or 7 years now, as far as the institutional demand for Bitcoin and what we've seen. I think we did a video back in Bali 6 or 7 years ago about
Yeah.
this. And it was obvious to me, even back then, that we were going to see increasing penetration, or it was very, very likely we were going to see increasing penetration of institutions. And a lot of institutions, frankly, are just very, very slow moving entities, particularly when you get things like sovereign wealth funds or very, very large pension funds. But, they also have deep, deep pools of capital, and a very small allocation is a big, big number.
Yeah.
So, yeah, I do think it's proving out. It's taking a while. It does take time. These things take time. Even if, Qatar or whoever else wants to buy hundreds of billions worth, the question is over what time frame. That could be over a decade or two time frame. But it's still, I think, ultimately a positive. It ultimately, what that means is it means, less supply for everyone else in a asset that probably has the best supply dynamics of any other major asset class that's above, a couple $100 billion. So yeah, very, very promising. Doesn't mean that, we go from 40K Bitcoin to 100K in 3 weeks, but it's just another kind of leg in the stool, so to speak. And I think, it also is a leg of the stool that becomes a very, very firm leg, because once you have that institutional participation, it doesn't tend to just go away overnight like hot money flow. So yeah, ultimately, I think it could mean that, Bitcoin becomes a little bit less volatile in the cycles ahead, but it obviously can help continue to put a bid under Bitcoin as well. So I think ultimately, ultimately you got to like that as a long-term hodler.
Yep. I agree, man. let's do some TA. I know people are always excited for that. So let's start by taking a look at the yearly chart. This is the 30,000 foot overview, and then we'll drill on down to the shorter time frames. But for you guys that are just listening on the pod, I think you'll still be able to follow along with what I'm saying here. But basically, we have a reversal year, right? So every 4 years, we have 1 year that typically goes down prior to the halving cycle. And we saw a big down year last year in 2022. Bitcoin was down 65%. And then this year so far, it's right back up. It's basically made back almost all of 2022's losses. And that started around, call it 50K, 48K, 50K. That's the kind of the big number. 30K was the big resistance level that took us about 6 to 8 months to get through up until just a couple of weeks ago. And we very quickly moved from this major 30K zone up closer to this 50K zone. So that is really interesting to see, because this is kind of the strongest reversal that we've seen after a red year. On a percentage basis, on a capital flow basis, like this is just a very aggressive reversal. And if we drill down, you can see as of today, so today is Wednesday, December 6th, we've still got a few days left in this weekly candle, but this is actually the 8th green weekly candle in a row, and price is actually starting to accelerate. So if you just run a simple back test, you can see that the probabilities of a pullback after 8 green weeks in a row is very, very high. It's over 90%. So I think within the next week or two, we will have a reversal candle on the weekly. So a pullback is coming. It's just how overextended does price get before that happens. And you can also see, if we look at the accumulation range from the lows around 15K up to that 30K, if you do a 1-to-1 stack of that range, that also lines up here in the high 50K. So I think we're going to get some kind of at least short to medium term reversal around 45 to 50K. 42,000 was actually my first profit target from my dip buys and the breakout ads. And so we've kind of gone through that relatively quickly. So I'm still watching price action. And I'm looking for either a parabolic blow off top or some kind of reversal pattern to take a little bit of profit here. But again, I still think that we're early in the overall cycle, and I'm looking for more buying opportunities, either dips or breakouts or bull market patterns where I can build in and maintain a good risk to reward and really just a great cost basis. So that's kind of what I'm thinking there. The other thing too is Bitcoin dominance continues to trek higher. Yesterday, we actually made a new yearly high, and this is the highest that Bitcoin dominance has been since early 2021. So Bitcoin continues to be a magnet for capital. And yeah, even though alts are going up, Bitcoin on average has been going up higher and faster than other alts. So there's certainly, we can look at some charts of some alts that have outperformed Bitcoin, but on average, Bitcoin has been sucking up all that capital. And this is typically what we see though, is phase one, Bitcoin goes up a really big percentage. And then as people take profit, they look for alpha and other tickers. And that's where large cap starts to pop. And then it filters on down to small cap. But
yeah, how are you thinking about one of the other larger caps, Ethereum? Because I noticed, I looked at the chart the other day of Ethereum versus Bitcoin, and it's been in a downtrend for, the better part of the last 5 or 6 months. Curious your thoughts there, because, Ethereum's supply dynamics are, I think, better than they were, right? There's been some changes to the supply dynamics there over the last couple of years. So interested to hear your take there.
There has, yeah. And look, I still put, Bitcoin in its own category, and then ETH and some of the other large caps kind of in their own like venture level risk. It's like startup level risk, right? And I tweeted actually these two charts a few days ago showing that, ETH has been underperforming Bitcoin really for over a year. It's been kind of bleeding out compared to Bitcoin. And even as it's gone up on the USD chart, like you said, Trav, like price has just been falling compared to Bitcoin. So, think of it this way. It's like if you buy Bitcoin, what is the reason that you would want to buy an altcoin? Well, you think the altcoin is going to go up a larger percentage and a bigger nominal value than Bitcoin against the dollar, right? Otherwise, you're just taking on more risk for a lower return. And a lot of newbies actually get trapped in this. And actually, I want to show, I think this is a good time to bring up this question that I found on Reddit. It was on the cryptocurrency subreddit. And the title is Bitcoin Bull Run Decisions. And this guy goes, I'm not rich. I'm a young buck with a dream. I've got a house, some crypto. I'm about to sell my 370Z to buy some projects. In my humble opinion, we will not see the bull run till 150 days after the halving. So he's coming up with his own mental model, right?
Okay.
But I want to be ready this time. I held on to one last run with a 0.06 buy-in, and basically he bought some shitcoin and then lost it all. He didn't take profits. Don't plan on that happening again. Did you guys sell any tangible assets for crypto or make any big choices that could affect your life if this doesn't work out? So there's so much to unpack here. But one thing that I think is interesting is the people that did get crushed or lost money in the last bull run, a percentage of them left crypto and are never going to come back, right? A percentage of them go, it's a scam. I'm not doing that shit again. But I think a lot of people, especially those with like a gambling mentality, they're like, okay, I want to play again. I want to get that rush, that hit of dopamine, right? And I'm willing to sell some real world assets to take a crack at the casino again. All right. Whew, man. So it's strange that even in the face of all this regulatory scrutiny and like Binance, people still wondering if Binance is going to be there and if CZ is going to jail, right? No matter that, like people are still interested in building wealth and finding alpha and getting rich, right? They're still chasing the dream, which I think is cool, but every cycle is the damn same. Most people are going to lose their money to a small percentage of professionals. And so whenever I think about this and I think about what are the expectations? Like, what do people think is going to happen? I think the expectation is that we're going to get a full-on altcoin season again. And right now, if you look at the chart, it's actually starting to develop and look that way. And I've said the past couple of market cycles, like, I don't think we're going to get another altcoin season because people need to wise up. Maybe they won't. Maybe people will do what they've done and just drive another bubble. I mean, the total 3 chart is absolutely showing that potential. And I think if we get above 450 billion, retail is back. I don't know. It's so weird though, because we're still in the wake of the FTX implosion and there's still a very negative connotation, but who knows? Maybe the masses will come back. That's why I've been watching this 450 billion market cap resistance level so closely. And if we break it, yeah, I mean, I think people will come back. So I know this is a really long soapbox, but to answer your question, what do I think of ETH? I have been buying ETH. I actually was scaling in prior to the 2K breakout, and I added a little on this breakout. And if you look at the USD chart, ETH has broken multi-year resistance. 2000 was a big emotional price level. We've had an ascending wedge into it. And so what I'm doing though is I'm positioned way heavier towards Bitcoin, and I've got a smaller ETH position and even smaller positions in about a half dozen alts right now. So I recognize that as of right now, as of today, Bitcoin is still dominating. It's still attracting capital at a faster pace than alts. But in the event that ETH starts to play catch up and we do start to get a bounce off of the ETH BTC chart where we start to see ETH gain on Bitcoin, I'd like to have some there in case there's alpha, right?
Yeah.
So I don't know if that answers your question, if it's confusing, if it's, yeah.
No, it definitely does. And I agree with you on a couple points, and I wanted to provide some thoughts as well on a couple things you said. So, one, I don't think human nature ever really changes. Like, the younger generations are not going to learn the lessons from the older ones just by hearing it from them. They're going to have
Right.
to experience it, and human emotion doesn't change. So I think, yes, I think I think we will be destined to see the same patterns play out in market cycles time after time, but not exactly the same way. And so I think it's funny, especially when you showed that thread from the guy on Reddit, and his mental model is centered around 150 days after the halving or whatever. I think one point I'll make there is that while cycles often rhyme, they're rarely identical, or they're rarely mirror images of prior cycles. And so
Mhm.
things will be different in the current cycle, in the next cycle. We see this in stocks, we see this in crypto. To try to pinpoint an exact playbook around the halving based on last halving or halving before, I think is, maybe not your best strategy, or you certainly should have some backups to that strategy, some price levels, or some, resources like our community that you're using to try to dial in case your 150 days post halving doesn't match up. So I think, yeah, I think cycles will, be based on a lot of the same human emotions, but they will always, be a little bit different in certain respects because the conditions and the variables are different. So I think that's important for people to remember. The other thing is, on the stock side, we are seeing signs that, risk taking is starting to look at least somewhat similar in the way that people are taking risks based on the past cycle, 2021. They're trading stocks like Upstart and Coinbase and things that, where I haven't seen the fundamentals actually improve all that much. Coinbase is a really interesting example. We wrote about this in the Daily Doe. Their retail trading volumes continued to decline last quarter, despite the fact that crypto prices are up and the stocks are up. And yet that stock has just launched higher. And so it's the fundamentals that really aren't driving that right now. Traders are piling back in. They're piling back into Coinbase. They're piling back into ARKK, Kathy Wood's ARK ETF. They're piling back into trashy names that they saw go up a lot in 2021. Doge is showing some green candles. So we are seeing, some similar patterns. But again, I don't think ultimately the outcomes will be exactly the same. I don't think we're going to see, exactly the same outcomes as last cycle. So we are seeing definite signs that the altcoin season could be upon us. But, be thoughtful and try to find patterns that aren't repeating. Try to find things that look unique in the next cycle. I think that's going to be important. So.
Yeah, I agree. And my thesis is whatever I trade, I want to lean into newer projects and stuff that have a good narrative for the sector, like gaming or AI or anything like that. But at the end of the day, I know I've said this probably 10,000 times on the show. I trade alts with the goal of accumulating more long-term Bitcoin and more fiat that I can diversify into other assets like stocks and real estate and even gold. I mean, we could talk about gold. I know Schiff was really happy this week that gold made a new all-time high, at least for a few minutes,
That
or
was
I think it
wild.
was
Yeah.
Sunday night in the pre-market,
Yeah.
had a little bit of a pop.
Yeah.
I mean, I've been bullish on gold too. And I from like 2014 through 2020, I was building a physical gold position, but it's a really slow market. And compared to Bitcoin, it's absolutely underperformed Bitcoin. But I want to have a little in the portfolio. What do you think?
Yeah. Yeah, I think there's definitely studies that show gold can be an interesting diversifier to an overall portfolio. For me, it's never going to be a huge allocation, but there's definitely times where I think it plays an interesting hedge role and can provide even sometimes positive returns. Also interesting to look at, just like we have on the crypto side, miners versus gold. If gold really does enter a strong bull market again here, then miners have underperformed for a while, and gold miners could be an interesting trade. Definitely something I would only trade more tactically in short term, but someone
Mhm.
who's looking for trade ideas, that's definitely one to keep an eye on. So yeah, the trading on Sunday night was really interesting. It looked like it gapped up in sympathy with Bitcoin as well. So it's kind of interesting to see that maybe there's a relationship developing here between crypto and precious metals. They have a lot
Yeah.
of the same fundamental reasonings behind them. Distrust of governments and central banks, protection against debasement of currencies, things like that. So they also are very different. Crypto has way outperformed the precious metals in its lifetime, but yeah, definitely an area I'm keeping a close eye on as well.
Yeah, we definitely. I'll pull up a comparison chart here of gold and Bitcoin. There absolutely was some correlation here over the past couple of months as Bitcoin started to break up above that 30K zone. That's where we saw gold also catch some legs as well. But yeah, I mean, Bitcoin is a more volatile asset. It's a better performing asset. Obviously, when you look at the compound annual growth rate, Bitcoin's up 65% from the lows in mid-October, where gold is up, about 17%. So obviously, Bitcoin is a much better performing asset, but I like to have a little bit of gold just in case.
Yeah, agree with that.
Yeah. So I've got a few other questions or just like posts here on Reddit that I thought would be really cool to talk about or at least give some value to people. This guy on the Bitcoin subreddit said, Bitcoin discussion with wife. So we've huddled since 2016. I think it's been a long time. Lately, the Bitcoin convo in the house, especially for my wife, has been that if it hits 100K, she wants to spend some of it. Not a lot, maybe 10%, maybe 10%. Myself, I'm against it, maybe 0.01%. If it really has to, anyway. Thoughts, advice, what would you do? It's not an argument, it's more just like a intense discussion. So I've sold Bitcoin since 2013. I've bought and sold and been in and out. I don't have this relationship with Bitcoin where it's like I have to hold every Satoshi like it's a precious, little thing that I can't use. I use Bitcoin to increase the quality of my life. I trade crypto to increase the quality of my life. My goal is not to die as an old guy with the most amount of Bitcoin. My goal is to use Bitcoin as a tool to buy cool stuff as my wealth grows over time. I've liquidated it to buy real estate, to buy toys. That's pretty much it. Really not to do anything else. But I've also sold some to diversify in other assets, even if I believe those assets will have a lower return over time. If it has a lower vol and less drawdowns in bear markets, that can also be helpful. So that's how I think about it. Trav, what do you think whenever you think about selling Bitcoin?
I think that's pretty spot on. I mean, certainly I would say there's probably a difference between buying pizza with Bitcoin and buying assets that make your life better. Life is short. I think you pretty much nailed it. Life is short, and I think you got to enjoy some wealth along the way if you've accumulated it. So, yeah, I mean, same thing with the stock side. It's like, at what point, do you decide to actually do a withdrawal? It's especially if you've got, a good strategy in place to make sure that you've got enough to be there in your retirement, enough for your children or whatever else you're putting aside for. But it can be highly dependent on the individual situation and wealth level. And obviously, yeah, but I think you pretty much nailed it from a 30,000 foot perspective. And certainly I would agree with it.
Yeah, I always just hate to see, like, in the later stages of bull markets, when things are going parabolic, we see this like, I won't sell if you won't sell mentality. It's like, man, do what's best for you. Like, how can Bitcoin improve your day-to-day life? If holding it makes you feel better and gives you more security, that's great. I mean, I do that too, but I also, it's not like an ego thing. Like, how many Satoshis or Bitcoins can I hold? It's, hey, what can I do with this? Can this actually improve my life this year in some way? If so, I'm going to use it.
Yeah. Yeah, it could also depend on too what the composition of your portfolio is. Someone who's very heavy, crypto weighted, it's going to be a different discussion than someone who's, like myself, where like I don't really need to touch my crypto hodl position because I've got, other liquid assets, things like treasuries and stuff I could take from first. So yeah, that's another thing to think about.
Yep, well said. All right, next question. Or I guess this isn't a question, but this is something I wanted to ask you about because this is a popular opinion that I've been seeing out there. This post is from the infamous Wall Street Bets subreddit. The job market is crashing, all caps, and stocks will go down with it. And the discussion is this. The two things that have kept markets afloat over the past year have been, number one, high employment, and number two, consumer spending. They are the literal foundation of the American economy. Once one goes down, everything begins to crumble. This morning's jobs numbers confirms it. My anecdotal experience seems to confirm the notion that the jobs market is trash as well. I'm a lawyer with a bunch of experience. I was back in 21, 22. He was looking for a job and drowning in interviews. And now remote jobs on LinkedIn that used to have less than 50 applicants have over 500 applicants now. So basically saying that the job market is getting tighter. Sure, if you want to be a wage slave at, a fast food restaurant, there's plenty of jobs, but if you're an actual professional, you're fucked. Wall Street is praying for a soft landing, but at the current rate that unemployment is surging, you'd be a complete moron to buy into that narrative. And I know on Friday, we have the unemployment data coming out, but do you agree with this sentiment and that he's saying this is what's propping up the economy and that it is guaranteed to go down?
I mean, I think he's right that the unemployment data, that the jobs market as a whole is very, very important to the overall economy. But I don't think we've seen any signs yet that, or I shouldn't say any signs, but we haven't seen significant signs that the job market has cracked in a meaningful way. We watch forward-looking indicators like the weekly unemployment claims. Those are still under the 250K level. When they get back above, 300K level, we start to be a little bit more nervous. I think the jobs data that he or she are referring to is the JOLTS job opening data. And that is a very, very leading indicator. It leads even weekly unemployment claims because, first you have things like part-time hiring rise. You have companies that post job openings, those numbers will decline. And then eventually you get to people actually getting laid off. So I do think it's a very, very important area to watch. And we have seen some deterioration in the job openings numbers. We haven't seen anything too scary on the weekly unemployment claims data yet. And we haven't seen certainly anything scary on the monthly unemployment data, which again, we'll get a fresh figure on Friday. Yep. But yeah, that unemployment rate still remains under 4. And I think, we'd be a lot more worried if it was rising rapidly towards the 5% plus level. We're just not really there yet. So again, I think this is the 2024 debate. This becomes the big debate between, is the soft landing going to happen or not? Is the Fed going to be able to cut back and cut rates to help the consumer, to help the economy, to help business investment before unemployment rises to too high of a level? And yeah, I think they'll adjust, even though they're talking tough about inflation. If they do see unemployment rise quickly above 4.5%, 5%, they're going to adjust their policy. So there will be some policy adjustment before, things just fall off a cliff. Like, I don't think this is going to look like 08 or 09, where we had a full-blown financial crisis in the banking system that caused businesses everywhere to freak out and lay off people. So that's a pretty unusual situation. We don't typically see the job market behave like it did in 08, 09, and we're not seeing that currently. So I don't think it's time to panic. I think it's definitely something we're watching closely and we have to be cautious about, but nothing I'm panicking about yet.
Cool. I think something that, I'm thinking about as a potential black swan, I think we talked about this last week, is AI and the layoffs that could come from that, and like what is like an ultra bearish scenario that could play out there. I don't think that would happen overnight, but it is something I'm thinking about. And yeah, I don't know. It'll be interesting. So basically on this post, you do give it credence. You think that there is something to watch here and that there is risk in the system, but you don't think it's going to like implode overnight.
Yeah, I think that's right. Yeah. Good point about AI too. In 2024, we could see even more acceleration in, AI deployment and AI products coming out. Cause I know there are a lot of companies that are still just doing internal testing on AI products. And there's a lot of stuff that even though we saw a lot come out this year, a lot of it was proof of concept and early betas. And next year, I think we're going to see a lot more, corporate utilization of AI in the corporate sphere. And the question is, does that eliminate a lot of jobs? Does it create new categories of jobs? Does it do both? What does that look like ultimately?
Yeah.
Still a lot of open questions there.
Absolutely. All right. The next question was in the real estate subreddit. This person said, do you think we'll ever see 4% mortgage rates again? So this is, I think, a question that a lot of people have because they're trying to figure out, prices keep going up. Right. The housing index keeps going up. Granted, on the luxury end and in major cities, prices have come down. But, a lot of people are trying to make the decision, do I buy and then refinance later? Or am I being foolish trying to buy now and then like, should I wait for prices to come down? So I think that's why the market's been deadlocked. A lot of people are just waiting and watching. So rates have been falling. We're back in the low sevens now, at least on the official data here. This actually came out this morning. You can see rates have kind of fallen from around 8% and they're down around 7%. But it's funny how far 4% feels away, even though we were just in the twos a couple years ago. Do you have a guess on this one?
Yeah, I think we could get back to the 5% range, I think, pretty quick. If we have Fed rates on the short end go back to, say, even something reasonable like 3% from where they are now at 5.5%, let's say the Fed gets it back down to 2.5 to 3 within the next year or two. The 10-year is probably going to have a little bit of positive spread to that in a normal environment. We've been in an inverted curve environment, so it's a little bit unusual. But let's say, typically the 10-year is going to trade at a little bit of a premium to the short-term rates. And then mortgage rates will have a spread above the 10-year. So let's say we get down to 3%. And this is, I think, totally reasonable to expect we'll be down at 3% again on Fed funds rate in the next 2 years. Let's say we get back down to 3% on Fed funds. And then you've got the 10-year at, say, 3.5 or 4, and then you add a 2% spread on top of that. I think we could be back down certainly under 6 and definitely closer potentially to that 5% level. 4% maybe going to take a little bit longer unless we get like a real deep recession and we do have the Fed cutting rates back down to, say, 0% or 1 or 2%. But yeah, I think 5% is definitely a possibility in the next year or two. I think 4% or below is going to be a tougher road given what we're seeing right now. But yeah, I think it's quite possible we'll see 4% mortgage rates again. But it's not going to happen in the next 6 months. But it's interesting you bring up this idea of, as a buyer, if you're thinking about, the market, certainly in certain markets here in Austin, for example, it is much more of a buyer's market. Prices haven't come down as much as you'd really want to see as a buyer, but they are down somewhat. And so the question is, well, at what point do I take the gamble that, I'm going to buy while the market's still more of a buyer's market and then just hope to refinance lower? Because you can always, refinance later, but you can't change the purchase price of the home later. Right. And so that is something I think that if you're in the market looking at a certain point, there is an optimal point where your prices have come down in your market and maybe mortgage rates haven't come down as much. And that could be a good time. But I would say ultimately prices probably haven't come down as much as you'd like if you're a buyer right now.
Well said.
Yeah.
All right. Last Reddit post. This is from Fatfire, which I love to look at. This is people that are focused on early retirement, but are not looking to do it on a shoestring budget. A lot of people work in tech or crypto and are looking to have an early retirement and be able to spend a bunch of money. And this question is, what's the best fun purchase you've made around 50K? This guy said, I received a bonus this year that was 50K above what I expected. I could save it or I could blow it on something for fun. What have you casually dropped 50K on that was just for fun? Trav, what's your best purchase around 50K?
Woo, that's a good one. 50K. I don't have a ton of 50K purchases. Obviously, things like vehicles and things like that come to mind, but those are pretty par for the course. Wow, that's a tough one. Yeah, I'm trying to think what other than like cars or real estate that I've spent 50K or more on.
Yeah, the first one that comes to mind is the boat that we bought together. That was around 100K, so we each threw in like 50. Yeah, and granted, I mean, we got a lot of that money back when we sold it, but I think, boats are an underappreciated, like overhated asset for liability. I mean, it's a liability, but we put over 400 hours on that engine, which means we had at least 800 hours of fun on that thing. So.
Oh yeah. Yeah. I definitely thought it was worth it in the end, but yeah, it's certainly not something you're expected to make a great financial return on.
Yeah.
Boats would definitely be up there, travel, it's hard to get to 50K on travel. And I mean, but maybe like a year of travel, like I know you and Nikki did the around the world trip. And yeah, my wife and I did a bunch of traveling last year. I don't know if we got to 50K quite, but it was up there.
Yeah. I mean,
So,
you could definitely spend 50K on, say, a month. If you flew first class, transatlantic or Pacific, I mean, that's easy. You could do 10 to 20K in flights. If you stay at the Ritz or somewhere where you're paying $1,000 a night, I mean, there you go.
yeah, absolutely. I mean, as far as aspirational purchases, I like you could do something crazy if you had the space, like build a pickleball court or like a sauna and a cold plunge. That'd be kind of cool, and that's like a
Oh
more
yeah.
permanent benefit. That would definitely be something I'd be interested in. But if you're being responsible, fund your kids, savings plan, fund your fund more of your retirement. But
Hmm.
assuming you've got that all taken care of, yeah. Maybe buy
There's a
some
couple
tickets to a.
good. Oh, go ahead.
Oh, I was just gonna say, like, like if you've got your team in the championship, go spend a few thousand on tickets and maybe a few thousand more on lodging, go have that experience. Or, if
There
you're
you
a
go.
Swiftie, I guess, Taylor Swift concert. Those
Yeah.
add up pretty quick.
A lot of the responses are obviously traveling, buying like, sports cars, shit like that. But another one was like giving. I think that could actually be really
Mm,
dope. Is like, um, there are some trips that I know certain wealthy guys organize where they go somewhere and then they make an experience out of it, but they're also contributing a lot of money. So they'll
mm.
go like build a village and fund the building of the village, but it'll be more of a hands-on experience. I think that sounds pretty cool.
Oh, that's awesome.
Um, Also, private pilot's license. I think that's a good one.
Ooh, I like that a lot. Yeah.
Yeah, we have some buddies that have done that, and it seems to be kind of the next level of freedom.
Mm-hmm.
Yeah, cool. Yeah, if anybody has any other examples, like leave a comment or shoot
Yeah.
us a DM. I'm kind of curious.
Yeah, leave some comments. I definitely like. I could definitely come up with some other answers too if we think about it a little longer.
Hmm. Yep. All right, cool. So we can start to wrap this up, but let's just do a little recap. We talked a lot about Bitcoin and altcoin season possibly kicking off. Talked about, I guess, my thoughts there. What another chart that I don't think I brought up was the Bitcoin NQ chart, where
Mm,
we're starting to see Bitcoin gain over the Nasdaq again. And this is typically indicative of a true Bitcoin bull market when that happens. Um, when Bitcoin and stocks are kind of tracking together, that's kind of boring and it's not really showing that Bitcoin's attracting capital flow. But right now we have broken multi-year resistance and it's breaking out in a big way. So I think it's just kind of confirming what we already know, that Bitcoin is in a full-on bull market. And, maybe if the NQ or, stocks run for an all-time high, maybe this will pull back. But just another confirming indicator that signs are pointing to the upside for the old Bitcoin.
yeah, and NQ looks a little bit toppy. There's some, signs that maybe big tech is investors are starting to rotate out a little bit of big tech. They've been killing it in big tech this year, but even stocks like Nvidia is showing a considerable amount of weakness in the past couple of weeks, and then just Nasdaq overall looks a little bit toppy,
Mm-hmm.
and it's
Yeah.
been underperforming versus some of the smaller caps over the past week or two.
Yeah. Interesting to see that rotation from big cap to small cap.
Yeah.
Well, anything else you're looking at over the next week? I know we talked about unemployment numbers and stuff like that. Anything else that's on your radar?
Oh yeah, we've been watching a few individual trades. We've been involved in some of the Spirit and JetBlue arbitrage. That's been working well. Got in at the right time there. That trial wrapped up this week. I think their final documents are supposed to be in next week, and we could get a decision on that by the end of this month. So that'll be an interesting one. Watching some higher risk stuff like Robinhood and also, some of the cannabis stocks have been showing some interesting option flow. So we've got some interesting potential plays there that we've been talking about in the community and following pretty closely. So yeah, it's a fun time because things are actually moving again. We've got
Awesome.
action in a lot of different things, especially on the stock side.
Yep. Great stuff, man. Well, now's definitely time to be dialed in. Things are starting to move.
Mm-hmm.
We've been planting seeds all year and retail is coming back. CNBC is pumping crypto again. So we'll see how that turns out. But it's definitely an interesting and fun time. And we're going to close out a hell of a 2023.
Yep. Love it.
Awesome. All right, guys. Well, if you're not already subscribed, make sure you're subscribed to the new YouTube channel, subscribe to the audio podcast, and leave us a review and tell us what you think of the show. And go to wetalkmoney.com/community to check out the wealth building community, and have a great weekend. And we'll see you guys next week.
Cheers.
Take care.